Hi everyone, welcome to another honeystocks.com stock market outlook for the month of August. Now before I do the usual and switch over to my screen share and walk you through a lot of the charts, a lot of the stocks and a lot of the areas of the market that I think are potentially poised to outperform the S&P over the next few weeks. I got a lot of messages after the analysis last week. Now, if you missed the analysis last week, I will link it at the end of this video. There's some charts that I've posted to social media this week that I know have had a lot of positive reactions, and of course, I'm sure there's many of you that have done very, very well on some of those names. But there's a lot of charts that I'm going to be updating the charts for, because I know there's many of you that have bought in and are kind of wondering, how to maybe navigate some of those positions. So I do have some names that I'm going to be walking through the updates to those charts. And of course, I'm going to be providing some new charts as well for the month of August. So over the next few weeks, I think there's some areas of the market that I think can do pretty well. We're obviously in the middle of earnings season, so I think it's very, very important to perhaps have some kind of rule set in place for positions. Just to give you an idea of what I'm talking about there. If you're looking to take a new position on a stock in the run up to earnings, in order to hold through earnings, I have a rule in place that says that the stock needs to be at least 10% in profit in order to hold through earnings. Now, I'm not talking about options, I'm not talking about any leveraged positions. I'm talking about the stock price has to be 10% higher than where you bought it from. The reason for that is it just kind of mitigates some of the risk attached to earnings, especially those small cap names that can move quite easily 15, 20, 30% in either direction. I find having that 10% buffer in place helps me sleep easier at night. So that's maybe one of the approaches that you could take. But let's switch over to the screen share. Let's walk through some charts, and hopefully you get some value from this. But let's dive in. Now, before I get into the charts, I think most of you who have followed me for a while pause the video, just make sure you're comfortable with that. There's not any investment advice, and please do your own due diligence. That maybe to give myself a little bit of credibility, I'm registered with the CMT Association. I'm working my way towards my charter market technician, and technical analysis is something that I'm widely known for, I guess, in professional circles. And if you get some value from this, please do subscribe to our channel, give the video a like, let me know in the comments if there's any stocks that are on your radar. It all helps to get my work out there. Now, I think the logical place to start, and of course the theme of the week has been, I guess, the market chop. Now, this has been my chart for months. Now, for those of you that are maybe new to my work, this is the S&P 500, and I'm using Fibonacci. Now, the reason I'm using Fibonacci, it's not because Fibonacci should be used on every chart, but with technical analysis, there's some tools that fit for one chart that maybe don't necessarily fit for others. But for the S&P 500, as we can see, Fibonacci has some merit here. These are significant levels for Fibonacci, and this is an important part of my work at the moment. And what I want to draw your attention to is we have reached the Fibonacci level, corresponds with the 4420 level, and it's no surprise to me that the market is encountering some chop here. Now, most of you know I don't use the magical hindsight indicator. You can go back and follow my social media. I posted this chart months ago, highlighting this as a level where we can probably expect a target, and of course some market chop, and that's exactly what we're seeing at the moment. So it's a little bit frustrating at the market. I think we need to get a confirmed breakout above this level, I think, to add that confidence that the market is going to break away from the stealth correction that we've had. The reason I call it a stealth correction is because a lot of the stocks under the surface have corrected. A lot of them are a lot more than 10% declines, but yet the major averages continue to climb higher. So it's been a little bit of a stealth correction, in my opinion, under the surface. We've got the S&P 500. This is the daily chart. Been highlighting again the importance of the 50 period simple moving average. Of course, we've pulled back and we're now trading close to all-time highs. Yes, of course, the market this week has oscillated a little bit, but by and large the market's in an uptrend, albeit a very choppy one. I am waiting for the Dow to confirm a breakout. I think that the Dow for me is the most important index on the planet. I know there's many that have the S&P 500, but for me it's the Dow. They're heavily correlated, and I think if the Dow can break out, no reason why the S&P 500, given the correlation, can't go along with it. So for me it's just a waiting game at the moment. I want to see the major averages break out, but I think under the surface, when we drill it down to the individual names that I'm going to walk through, I think there is a little bit of opportunity in various areas of the market. You just need to kind of know where to look. Again, I think everybody was losing their mind, I think, on Tuesday. Again, I posted to social media just highlighting this as a probable support level, and lo and behold, that's exactly what happened. Yeah, again, called it in real time, not using the magical hindsight indicator here. So we'll see how this develops with technology. I think if you're bullish on technology, which I'm assuming most of us are, I think it's difficult to be bearish on technology given the way the world is. But I think if we start to break below the 20-day, it wouldn't surprise me if we go and add on maybe the 50-day moving average here, we could quite easily come back and test it. But I'm not going to go making calls like that. I'd rather just stay in my stocks as long as they're going up, and as long as the market's going up, who cares what the averages are doing. Again, Russell 2000, I talked about this last week, saying how when we're at the bottom of the range, we tend to go to the top of the range. It's textbook technical analysis, trading range, and nothing I've seen this week has changed my view on that. Again, I understand it's been a little bit choppy, probably a little bit frustrating for many, but this is just how I see it at the moment. Growth versus value gets a lot of debate. For me, charts tell me that there is no debate. If we are above this level in this ratio, this is a chart that divides growth by value. If we are above this level, this tells me that growth stocks are the area that we want to be looking at. Yes, there was a 6-month period where value was outperforming growth, and certainly that's what we've seen. But when we pulled back in this ratio, what happened? Growth took over again. This is absolutely no coincidence to me that this is all textbook technical analysis, especially when you drill it down to a professional level. I know there's many of you that will have no clue what a ratio chart is, or indeed how to use them. But this told me go by growth, and again, what have we seen over the last few months? A move into growth. Now that leads me on to some areas that I talked about last week that I think again should be added to the radar. Now when we look at the IP ETF, we can clearly see there's a very definitive sideways range. I'm looking for a breakout above this range. What that will then tell me is that these stocks could be poised to make a bit of a move. I'm sure there's some names in here that many of us have holdings in one way or another, but when we look at the major, the ETFs, if they're breaking out, you want to go and find the strength within those ETFs. Again, we've got semiconductors going out a closing all-time high. That is not a bearish characteristic. So again, I think semiconductors should probably be added to the radar. Again, XLK, just a whisker of all-time highs. So that's 5 minutes of, I guess, broad market analysis. What I'm going to do now is just drill it down to, I think there's maybe 22 names. That one I've covered last week, but I've had a lot of emails and a lot of messages, so I'm doing updates to those. But there are a lot of new charts in this week as well. And again, hopefully you get some value, and hopefully you can add these, I guess, to your watch lists. Now, I'm sure most of you have picked up on my Scottish accent. AIRBNB has come onto the radar because in the last 7 days we've had an announcement here in the UK that the borders are being opened up again. I guess you guys from the US, Canada, etc. can come into the UK again, and again the UK is able to now travel out to lots of areas within Europe. What does that mean for the travel industry? Well, for me it equals bullishness. So what I've done this week is I've gone and had a look at some of these names that have been beaten up a little bit and looking for technical opportunity. I've identified AIRBNB, and I'm looking for a break of this trend line, and I'm looking for this to be a potential high momentum area where we get a lot of buying come in. Of course, technical analysis, it's not a guarantee, but this is an area that I'm keeping an eye on because I can see this trend line has a little bit of merit. Amazon, lots of questions on this one. Now, of course, very difficult to be bearish on Amazon when it's breaking out to all-time highs from a massive base. What we've had in the last 48 hours, however, is of course a negative reaction to earnings. Now, for me, a negative reaction to earnings isn't a reason to go rushing for the exits, especially when you have a gap down such as this. Yes, I understand it's not great, but what I like to use with technical analysis is just to identify areas of technical analysis that give me little bits of information that I can use to perhaps stay in a trade or indeed take advantage of a decline. Now, I'm using a 14 period RSI here, and what I want to draw your attention to here is that Amazon has not reached oversold conditions. I think this is dating back to 2019 on the chart. So let me just close that. Yeah, so it hasn't reached oversold conditions, but what we can see is when it reaches the lower end of this range, and this is quite typical for stocks that are in uptrends, which Amazon technically is, bit of a sideways chop, granted, perhaps uptrend isn't the right word, but when it reaches the lower end of this RSI range, we can see that it's quite often a decent opportunity to go in and buy the stock. Of course, if it reaches oversold conditions, I'm guessing some of you will have learned the old trick that you buy stocks when they're oversold and sell them when they're overbought. The problem I have, and this is something that we learn at a professional level, is when it reaches an oversold condition, that's a characteristic of a change of trend. So although you might get that short-term bounce, and the bounce might last a couple of days, ultimately what will then happen is RSI will reach oversold and then it will rally, but it generally won't get above the 40 to 60 range, and then the stock declines again. Now, I'm not saying that's going to happen with Amazon, but if you're looking to be in a stock for a long time and you want to be in a good trend, once it reaches an oversold condition, it becomes a day trading, swing trading game, and that's not what I'm known for. So, but hopefully the insight in Amazon helps some of you that have maybe been caught on the wrong side of that one. Square Inc. disclosure, I own quite a significant chunk of this stock. Patiently just waiting for a breakout here. I think last week highlighted this range. This is also a stock that was provided to our clients and members when it was at the bottom end of this range. Of course, the trend has been lovely. It's done very well, but I'm just patiently waiting for a further breakout here, and that will give me the confidence to perhaps add to my position. We've had a big breakout this week in Thermo Fisher Scientific. Again, very, very similar to Amazon, where it's in an RSI bullish range. It hasn't reached oversold conditions. Again, so, you know, the breakout, there's room to run with RSI, decent relative strength. The hope is that if this breakout catches a bit of momentum, then relative strength should start to outperform the S&P 500. We have C Limited now. Lots of messages on this one. This was in the analysis last week. Now, obviously, when the market taking a little bit of a wobble at the start of the week, China was front and center. Now, with C Limited, for those of you that maybe don't know, but C Limited is actually owned partly by, I think it's Tencent, which is obviously a big Chinese company. But C Limited is not a Chinese company. C Limited, I think, his operations are in Singapore. And when we have the declines, obviously with the attachment to Tencent, we've had a short-term decline, news-driven event. We cannot do anything about that. But what C Limited is really demonstrating to me now, of course, you know, we've got a closing weekly all-time high on this candle here, but as soon as we start to chop, it starts to become less and less appealing. So what was once appealing perhaps 10 days ago, for me, starts to become unappealing. And for me, I would just be looking at this one. If it can get above $300, I might take another stab at it. But I think for me, it's off the radar at the moment. Then perhaps on any significant decline I might be interested, or indeed on a breakout here. But as it stands at the moment, there's no real risk to reward proposition. Obviously, great company, but you know, I don't tend to pay attention to the fundamentals too much. For me, it's all about price, because I understand that it's price that ultimately pays. We've got DocuSign, disclosure. I own plenty of DocuSign. Above 293, I think you can continue to remain bullish. The problem that I am starting to think about, however, and again, those of you that maybe don't understand technical analysis and failed breakouts, this is starting to have the look of what I would call a bit of a head fake. The reason it's called a head fake is because it looks just the shape of a head. It really is that simple. So I think if we start to break down below these levels, and certainly break below 270, that would be a big problem for me, and that would tell me that that's a failed breakout, and I'd probably look to exit my position. But I think with DocuSign, provided you're above 293, I like it a lot. Global E-Online Limited. Now, pay attention that that's got earnings coming up early next week, so this is for consideration post earnings. Again, those of you that are familiar with my work will know that I never advocate buying positions in the run up to earnings. I like to have at least 10% profit in price in order to hold through earnings. The very simple reason for that is it helps to mitigate some of the risk for those dreaded 20%, 30% gaps down that we can obviously see. I think Amazon would be a little mini example of a downside gap on earnings. It's not fun. And when you talk about some of the small cap names, for example, it can be a big problem. So I think for consideration post earnings, have a look to see what the earnings look like. Maybe you get what I like to call the earnings discount, and maybe you can take advantage that way. Or maybe it's quite a flat earnings, but there's a favourable reaction. So yeah, I think that one makes a lot of sense, and I have communicated this one to our clients and members last week as well. We have Shutterstock. The breakout is holding. Yes, the market obviously had a little bit of a wobble earlier in the week, but I think as long as you're above $100, I think you can continue to be bullish on Shutterstock. American Airlines. Now, American Airlines put in a failed breakdown a couple of weeks ago. Of course, we got a massive rally on that. Now, something to bear in mind when you look to buy beaten up stocks or names or discounts, whatever you want to call it. In order to get back to previous highs, of course, there are key significant technical hurdles to overcome. This is the 50 period simple moving average, which is acting as a brick wall at the moment. I think provided American Airlines is above $20, I think the bullish thesis is still intact. But I would have concerns, however, if we start to break back down below these levels. It always worries me slightly when we see the 50 period moving average acting as resistance, because that's a characteristic of a downtrend. So I'm hoping that American Airlines is not about to start a downtrend. That would be, I guess, a frustrating one for many that are into the airlines and holding airlines, for example. But again, that's the technical view. Facebook. Earnings this week, we've had a decline. Now, I touched on this one last week and said, provided that you're above this level, then I think you can continue to be bullish on Facebook. Now, of course, it's Facebook, great company. Nothing really concerned me with the earnings. I think slightly lukewarm guidance. It's not a big problem for me. The 50-day simple moving average has been acting as support for the stock. I think if you can get a pullback into this level with a bit of a bounce, that's possibly an area where I might be interested to take a buy on it. Or indeed, if we get a move back up above 365, I think I'm quite comfortable to buy it. But I think at the moment, there is a concern here that this is a potential failed breakout. Given the significance of the Fibonacci levels, and I'm watching this one closely. For those of you that follow my social media, will know that I posted, I think it was around 10 days ago or so, on the back of earnings, just saying this is an earnings discount in my view, where we have really good earnings, but Wall Street finds a way to decline the stock. That's ultimately what happened. I own DR Horton. Many of our clients and members own DR Horton. And most of us are looking to add to our existing position on a breakout above 97. I think there's a further 10% upside minimum. And of course, ultimately, given that it appears to be a Fibonacci chart, that's actually the magic number that I'm looking at as an upside objective. I covered Carrier Global Corp last week as well. It's followed through huge breakout. Congrats everybody that bought it. I actually first covered this one on this breakout here with our clients and members, and it's a textbook 50 period simple moving average uptrend, and it now looks like it's starting to motor. I don't see, I think it would be quite difficult to buy a stock when the RSI is quite high. So I think looking for any weakness would probably be the way to go here. Perhaps on any pullback to around the 50-52 level, I think makes a lot of sense. Apple again posted earnings this week, blowout earnings, no concerns whatsoever. We're holding the 20 period simple moving average at the moment. We actually closed the day green today. So yeah, of course, I'm sure most of us own Apple in some way, shape or form. I have a significant position. So again, update to the chart last week on the back of earnings. I have no concerns. Crowdstrike, I think, is going to be offering an entry one way or the other quite soon. I think I'm viewing this as a bit of a tight sideways range at the moment. So sideways ranges, as I talked about before, you buy at the bottom and you sell at the top, or you buy the breakout. It really is that straightforward. CVNA, I covered this one last week as well. I like it above 328. It's holding its breakout level. Now, the reason why this is included is it's got a high short interest. Now, of course, with high short interest, there's higher risk attached to it in my view. But the rewards can be very, very good if you do get a short squeeze on it, which I think most hope for when you see high short interest like that. So CVNA might be a way to play. I think when you've got high short interest like that, you don't necessarily have to buy the underlying. You can take an options position which is fully risk defined. If the options expire worthless, it shouldn't really be a big deal to your overall account, provided you've positioned sides accordingly. But I think with CVNA, I do like it above 328. Viva Systems, covered this one last week as well. I like it above 327. Google, another blowout earnings from Google. Not really much else to add. Now, given, as the chart can demonstrate, the Fibonacci levels hold a little bit of merit here. Now, I actually posted this one to social media during the week, and I think one of the comments that came back at me was, well, Sam, that's great, but it's blown through every Fibonacci level. And my response is, yes, of course, I understand that. However, what you might not understand is that to get through these levels, this can be 9 months. It's not like it just breezes through immediately. I mean, there was an occasion here in November, it taken a few months, November to February, and then it broke out. So the way that I approach these is, if it doesn't break out within the first couple of weeks and you start to get that chop, I would much rather just say, thank you very much, Mr. Google, and move on to the next one, and revisit Google either on a significant pullback or on a breakout. That's just the way that I approach the market from a technical perspective. It's a blend of technical analysis and investing. I'm sure most of you can understand now, I'm not a day trader, and this is how I like to approach the market, and this is, I guess, what my work is known for. We've got Home Depot. I think the thesis that I have on this one is it's building the right hand side of a base. I think there's about probably another 5% upside there, and of course with bases, we want the base to ultimately break out. So the bigger the base, the higher in space. So above 3, 4, 5, I think Home Depot could really get going, especially if the home builder ETFs start to move as well. Moderna, again, been highlighting this one for a couple of weeks now. This is a very significant RSI level for me. It's no coincidence that we've been chopping around here. Again, those of you that don't know, I posted this chart to social media, and within minutes the stock declined, I think 14 or 15%. Of course, with parabolic moves, they tend to keep going higher. The problem that you have with parabolic moves like this, and I should say as well that I first covered this one on this breakout, it's obviously moved 100+%, I think now, but you have to keep inching up your stop loss and be quite strategic with it, in my opinion, because there will be a day sometime soon where Moderna will get cut a little bit. I don't know what percent it will ultimately be, but if you look at this candle, that was a 15% decline. What would a real decline look like given the nature of this move? So this is one of those names that I see going much higher, but it will have to digest some of these gains sometime soon. Another Fibonacci chart, we've got match. We're in a sideways range at the moment. I've got an upper target here of 175. If it can get through 175, there's a 230 target. That's the next Fibonacci level. And of course, the chart shows that these Fibonacci levels have merit for this particular name. NVDA, covered this one last week after the stock split. For me, it is holding its 20-day simple moving average, or I should say oscillating around it. But I ultimately see this one breaking out, and the reason I think that is because if you think back to the semiconductor chart that I presented at the start of SMH, going out at all-time highs, you would expect in that environment, if semiconductors are going to catch a bid, you would expect NVIDIA to go along for a ride as well. Nothing has changed with my chart with ROKU. Last week I highlighted this as a probable resistance level. That's ultimately what we've seen. But it does have the look of a chart that might be starting to form a bit of a cup and handle pattern. It retraced 50%. So this is a Fibonacci retracement tool. Now this is also a logarithmic chart. I think that's the other thing to say. It doesn't look like it's dropped 50% because it's a log chart. But this is a 50% decline from this whole move higher. Again, Fibonacci technical analysis, and it looks like we're potentially going to build a handle here, or it could just end up going range bound. I have no idea, but for me it just has the look of something that I tend to see a lot. But either way, I like it above 500 bucks. Those of you holding Boston Beer Company, you have my sincere sympathies. I know it's not fun. I covered this one last week. I had a few private messages on it. It has retraced 61% from this entire move, so it's not a surprise to me that it's holding firm at this level. I think the problem that I have here is that this has the look of a bit of a bearish flag formation, and if you do get a break below 691, then I think it's a big problem. The other thing to say is this could absolutely hold as support, and you know that the stock could start to rally from here. But I think it would make sense if you own it to maybe have some kind of game plan in case it does start to break lower. Starbucks, I highlighted this one as a potential pullback opportunity and to look for a retest. And it looks like it's kind of pulling back now and offering that opportunity. So pullbacks with an uptrends offer opportunity. Many of you will have heard me say that many times before. I don't see anything different there with Starbucks. T-Mobile reported earnings. I like it above 150, again using Fibonacci. Trade Desk holding its breakout level at the moment, so I think provided that we're above $80 here in Trade Desk, I think for me in my process I like it, and I think you can continue to be bullish. We've got Waste Management, looks to be breaking out from a bit of a base here. I like it above 145. Big breakout in AMD this week. Now this has obviously had a monster rip higher. Now this is actually a chart that I provided one of our clients this week, just saying that you can reasonably expect a bit of a pullback here. Now the way that I approach this is, once you break out of these monster bases, you don't really want to see the stock move back into the base. That's a big problem for me. So I think for me, provided this $100 level holds on a pullback, I think AMD is definitely offering opportunity. I think this is one of those that again could go much higher. So I think pullback offers opportunity, provided the pullback doesn't drop below 100 bucks. Ethereum, I trust the chart makes a lot of sense. Volatility is not for the faint of heart. I obviously own Ethereum. I've talked about this many times, and I'm looking to build more position on these key levels. And we've also got Mercado Libre, Melee. They report earnings on the 6th of August, and I like it above 1650. So I think it makes a lot of sense to maybe just add that one to your watch list, maybe see what happens with earnings, and I guess take it from there. Now, if you are somebody that enjoyed this analysis, feel free to stick around for a minute. But if you have got some value from that, please do subscribe to our channel. Give the video a thumbs up, give it a like, let me know in the comments what charts you like, and let me know if you enjoyed it, and if I have more time, then I'll hopefully do more of these. But my time is very, very limited due to the nature of my work. For those of you that are perhaps new to my work, you can jump on to the website honeystocks.com. We provide technical charting research. We've got various memberships. What does our memberships provide? Well, we have premium weekend analysis, very, very similar to what you've just watched, albeit a slightly bite-sized chunk, with much more, detailed and actionable charting. We provide trade ideas. I'll show you what that looks like in just a second. We provide our midweek halftime analysis. We provide a trading community, provide charting support. Maybe you're not somebody that's terribly confident with charting. I'm on hand to provide my own charts when required, all on our platform. And if you're somebody that has no clue about technical analysis but wants to learn, we also include with our memberships our technical analysis program. So there's a lot in there. All you need to do is just click on join, and it'll take you through and show you what the membership options are, and you can just kind of pick out and see which one suits you best. But it's all very, very straightforward, and you can do it all online now. But this is what our trade ideas look like. This was posted to our clients and members around 6-7 weeks ago. Cloudflare, I think we had about 120 today. So that trend is going very, very well. This is the chart for Square Inc. Again, this was an alert that went out. It's obviously up at the top end of the range. Antero Resources was a massive winner. I think it ended up being 35-40%. You got Yeti, big winner. Plug Power last year was 300-400%. But I'm very, very unique in what I do. For those of you that know anything about professional technical analysis and the CMT Association, we're all bound by a code of ethics, and I log all of our trade ideas on our website so that you can make an informed decision as to whether or not the types of stocks that we send out for our official trade alerts are the types of stocks that you like to buy. We don't put out penny stocks or stocks for $5-10 usually. It's all quality stocks, quality names, and of course I'm sure you can understand from the analysis that I'm known for identifying uptrends. So feel free to go and check that out. But every single one of them over the last 3 years has been logged, and we have a very much quality over quantity approach. We're not throwing out text message alerts or WhatsApp alerts or anything like that. I've got a very professional setup with my app and a dedicated platform that I host all my content on. But these are some of the testimonials. This is a message that I received this week. Your guidance has made my year, not only for the returns but the community as well. Another one here, results since joining Honey Stocks back in January. If you look at the S&P 500, and this is the individual's account performance, received that 10 days ago. Another message in the last week, trading portfolios up big, have extreme anxiety. Vince, second year in a row, trading account is up over 100% for the year. This is an example of my work and how my members and clients use it. This is a chart that went out for Funko, breakout here, and eventually stopped out way up here. And of course, massive winner. And there's Vince with his massive win, fun ride. Another one, 100k to 160k. So that's what my platform does. please go check out the website. If it's a good fit for you, you can obviously choose an membership option that suits you. But I think if you're trying to get away from day trading, I think if you're looking to maybe learn technical analysis, maybe you're just too busy to filter through thousands of stocks, and maybe you just want to be part of a community and have a little bit more confidence, might be the place for you. But go check it out, and if you've stuck around to the bitter end here, I thank you very, very much for watching. Hope to welcome you soon, but whatever you're up to, enjoy your weekend, and yeah, good luck in the markets.